Hello and welcome to Inderes TV. Today I'm in the studio with analyst Rauli Juva to discuss H&M. Hello Rauli.
Hi Pia.
Welcome. So H&M reported their Q3 result at the end of September. What was the main takeaway from this result report?
I think the main takeaway was that the margins on EBIT level actually turned down compared to the previous year, whilst kind of the expectation and the trend so far has been that they have been increasing towards the company's 10% target, and that was clearly a disappointment, and that's a result of many factors, but I think that's the key takeaway in the report.
So the company expects strong sales figures from September, and they also cited a good reception for their fall collections. What are your expectations on the last quarter?
Yeah, that was a good number and kind of softened a bit with the otherwise quite weak report. But yeah, we are expecting the sales growth to basically pick up in the Q4 in total. Of course, September is already 1/3, even if the months are not equal. But we expect 5% for the Q4 in total, and then if we actually look into 25 as well, we are expecting I think somewhere in that magnitude for the growth for the fiscal 25 as well. So we are kind of expecting the market and H&M's growth to pick up from here onwards, also on a more permanent basis.
H&M turned their 10% EBIT margin target that was previously cited for 2024, now turned it or pushed it forward and made it a long-term target. What are your thoughts on this?
Yeah, it was always kind of mentioned as a long-term target, that then they specifically said some time back, I can't remember if it was a year ago or in the beginning of the year, that they would expect or hope to, or ambition was the right term. Ambition is to reach it this year, and now it became quite obvious already before the Q3 that they will not be reaching it. It was already a quite challenging target to begin with, and now we actually estimate that the margin will be something like 7.5% for this year. So it's quite far, and not wanting to commit for that, for instance, for next year, I think, as well as the level which they will end up for this year, to us indicates that it continues to be a quite challenging target also for the coming years. So we are not expecting them to reach that. We believe that they will get much closer and above 9%, I think, in 2026. But still that clearly shows that when perhaps the margin dynamics and the markets are at least not at the moment not in such shape that they will be able to do such margins.
Yeah, so quite far away, at least in our estimates then.
Yeah.
They also indicated that the store network continues to decrease in Q4 or the rest of the year. Is this something that's a cause for concern, or is it more just due to online sales becoming more prevalent?
I guess it's both a bit. So yeah, of course it's a function of also a function of online being increasingly important, but the company was previously expecting that the long period of the multi-year period of net store closures for H&M would come to an end during this year, and now it seems that it continues, and it might continue even next year. I think to some extent the numbers are not big in the context of H&M, so the impact for instance the sales is not huge, or it's below 1%, I think, if we just kind of estimate what the impact from the net closures are. But of course that highlights the fact that the market has been weak, and they kind of continue to be, I guess, a bit weaker than what the company themselves expected in the beginning of the year when they commented that they would expect this to level out. So in that sense, of course, it's also if not a worry, but a signal at least of how the markets are at the moment, and also kind of course Coming back also onto the margins, that the H&M really wants to also get towards the 10% margin, and that means that they need to cut the stores with lower profitability, even if that would mean sacrificing some sales perhaps, but then supporting the margin.
Yeah. And then finally, the valuation and recommendation, what do they look like at the moment?
Yeah, it's for this year, now that the earnings seem to be ending up quite a bit below what we believed in the beginning of the year, it's a bit on the high side. I think PE is close to 20-25. If things go like we expect, it's already decent for next year. So below 20 times PE then, but that kind of includes an assumption, like I mentioned, that the sales will actually pick up and the sales growth will pick up and the margin will continue quite nicely higher. So that has not been what they have been delivering so far this year. So let's see how that goes. So I would generally say it's maybe fair or somewhat on the high side, and hence the expected return is fairly modest, and the share is basically quite fairly priced in our view, and then we have a reduced rating due to that.
Okay, thank you very much.
Thanks.
And you can read our Q3 report on inderes.se.